Equinor posts record profit as gas prices soar in Europe by Nerijus Adomaitis and Nora Bully. Oslo, Reuters. Equinor reported record earnings on Wednesday, and as the war in Ukraine triggered an energy supply crunch that sent gas prices soaring to all-time highs. The state-controlled Norwegian company has emerged as a big winner in Europe's energy crisis, generating 18 billion in adjustment pre-tax earning in the first quarter as it sold gas at prices more than 4 times as high as a year earlier. Continued capital discipline and cost focus enabled us to deliver very strong financial results and cash flow. Strengthening the balance sheet, Chief Executive Officer Anders Opedal said in a statement. The sale of natural gas is now Equinor's most profitable business, exceeding traditionally dominant crude oil revenue as Europe scrambles to fill depleted gas storage amid fears the war in Ukraine will lead to a loss of Russian supplies. The 18 billion result compared with a revised 4.1 billion a year earlier and beat the 17.1 billion predicted in a company compiled poll of 25 analysts. The average Avoices European natural gas sales price was 345% higher than the first quarter of 2021 due to low gas stocks in Europe, high demand and tight supply, Equinor said. We have optimized the gas production to deliver higher volumes and Hammerfest LNG on track for a safe startup on 17 May. Opedal says, referring to an Arctic gas facility that has been out of commission since a fire in 2020. Still, while rivals ExxonMobil, Total Energies, and BP recently promises to increase their share buybacks, Equinor stood by a plan announced in February for dividends and share buybacks of 10 billion in 2022. Given the net debt position and strong results, as well as peers increasing buybacks in recent days, we do think there was some expectation of Equinor increasing its distributions. RBC Capital Markets said in a note to clients. Brokers Jefferies said Equinor's decisions not to distribute more capital to owners will lead it to share price underperforming the market. Equinor's Oslo listed shares had rising 0.9% by 8.11 GTM, slightly underperforming a 1.1% rise in European oil and gas shares. Norway's largest firm is still up 39% year to date, however. The company reiterated its plan to withdraw from Russia, booking a 1.1 billion impairment in the January-March quarter and dropping Russian crude supplies as previously announced. Equinor has stopped trading in Russia oil. This means that Equinor will not enter into any new trades on engage in new transport of oil and oil products from Russia, the company said. Equinor maintained a quarterly dividend of 40 cents per share as planned, a half of which is an ordinary payout and the other half seen as an ordinary extraordinary payment due to high petroleum prices. Writing by Gladys Foch and Terje Solsvik. Editing by